Hello and welcome, everyone. I believe we are live. It's 2026 and we're back after 2 weeks. Um, this is our ninth episode for Alpha for Everyone. And Brendan and I here are joined by a very special guest, a frequent collaborator and someone we've had a relationship with. My gosh, how many years has it been, Ryan? I don't know. In
It's been a
various
long
different
time.
various
Yeah.
various different permutations.
Been a long
Uh,
time now.
been a long time. As usual, we want to bring the Gopher audience the latest tools, the latest technologies, in order for them to expand their horizons within the crypto space and what you can do with your assets. So really excited to have Ryan here, who's going to go into the platform, which he is indeed founder and CEO of. Have I got that correct? Sorry, Ryan. I don't want to. I
Yes.
don't want to
Yes,
demote
sir.
you or promote you.
Yes, sir.
And of course, we have Brendan, founder and CEO of Gopher, with us here today. And following Ryan's demo, uh, we have been on a break. I wouldn't even call it a break because we've been busy in the backgrounds building new features and new functionalities. And uh, Brendan is going to give us a little overview of what those will be. Welcome, Bodfoss. We have a lot of people filtering in. Um,
Yeah,
and
I'm
it's
I'm
good.
just planning on walking us through like a bit of a reflection on the end of last year, kind of where we landed up, and then an outline really clearly as to what's coming next and what we were cooking up over the holiday break, which is I'm really excited about, and we're seeing some amazing results with. So be looking forward to kind of getting that into that towards the end and showing you what's coming up next over the next couple of weeks.
Amazing. Without further ado, Ryan, I would love you to introduce yourself. Give us a high level understanding of what Teller is. And for the traders and investors and degens and crypto curious amongst the Gopher community, what they can do and how they can get involved with your platform.
Oh, let's do it. So I can start with a little bit about myself. I've been building in DeFi for the last 6 years. I think that's when Brendan and I met a while back when I was
Yeah,
originally starting to
I think
dip the
when you
toes in
guys
the
did
water.
your like fortune teller
Yeah,
like launch way back. I
way
don't even know when that
way
was.
back
Like maybe 2020.
2020. Uh, yeah, yeah. So it's been a really fun journey. I think DeFi, it's like so cool to see where DeFi has come today, and I think it's obvious to us and the rest of the world that DeFi will be the back end infrastructure of all of finance. What motivated me to be in crypto was that the finance industry should run by code. It should run not by people in a back office, but by code that executes. And I think as much as we talk questions about Tether and what is backing the stablecoin itself, I think they're like a really powerful example of why DeFi matters, where you can have such a small company and a small team running such a massive financial product that would take so many people to run in the current world today, in the current financial ecosystem. So that's me and what got me like really motivated to building crypto, and I think still really pushes me to keep going in crypto. Teller is a really interesting product for long tail assets and assets outside of the typical stable coins, Bitcoin and ETH, in the crypto ecosystem. We think everything will be tokenized, all the way from the non Bitcoin and ETH tokens, the ERC20s of today, to stocks, which are starting to become tokenized, to everything down the line from real estate to, of course, predictions as we're seeing today in poly market and even perp trades over time. So with that, Teller offers a really nice suite of products for these long tail assets, A, to earn yield, but B, to be used as collateral and put to work. So that's what we'll be going over today, both the yield side and the putting these assets to work side. If it works, I can share my screen and we can kind of go through the product. Zach, let me know if that.
Let's do it. Hit the share screen and then I'll add you to stage.
Yeah, and I got
Let's
a
do
quick
it.
question for you, Ryan. Like for people that may not know this, what do you mean by a long tail asset? Like, Can you break that down for us, just in case that's a term that people haven't heard before? Like before you sort of really started mentioning it previously, I'm not sure if it's something that I mean, it's common vernacular, but it wasn't something that I'd heard an awful lot about or had thought about.
Yeah, we think of short tail as stable coins and Bitcoin and ETH, the major assets that anyone would hold in their portfolio. There are really liquid money markets around these assets already, and typical liquidation-based platforms such as Aave, Morpho, and others work very well for these short tail assets because there's so much liquidity that there will be a proper liquidation for these assets in the case that there's a massive drop in price. As you start going down the tail of assets, so this is where you go from the short tail, your majors and Bitcoin and ETH, as you go into all of the altcoins, the liquidation based platforms start to have different issues with tokens that may have less liquidity in liquidity pools, or maybe bespoke assets such as today tokenized stocks, tomorrow might be real estate. That's where a platform like Teller really kicks in. So long tail assets are interesting because we love to hold altcoins. Altcoins can gain value rapidly, but they can also be used for these really interesting use cases. However, if you have a liquidation based mechanism where the price drops rapidly, there are liquidations, you can run into the case of bad debt and the case of cascading liquidations, where over the course of 5 minutes, if a liquidation does start to cascade, you'll see a wick on a chart where the price may have been static and a liquidation occurs and it drops down significantly, maybe even 50%, and then kicks back up. And that's an issue for both lenders and borrowers in liquidation-based pools. Because on one side, typically the liquidators will be able to liquidate at a value that's below the value of the loan, which creates bad debt. And for those that are borrowing, they're out of their tokens at a place where maybe that token wouldn't have been liquidated. So I would say this is where Teller is really interesting for use cases that maybe wouldn't be feasible with a liquidation platform because Teller doesn't have margin-based liquidations. Teller loans operate like a bank loan, like a traditional loan you'd get for a mortgage, where the loans revolve on a monthly basis and borrowers roll over by effectively adjusting the LTVs by the end of that loan term. So if I were to open, let's say, a $100 loan on, let's say, $200 of collateral, I would have 30 days where there is no risk for me as a borrower for that liquidation to occur. I would simply have to roll over the loan, which would be adjusting the LTVs or the loan to value ratios by the end of those 30 days. And by that 30-day period, the time would come up and I would roll the loan over into a new loan. So I can keep that loan outstanding just like a platform like Aave or Morpho. The difference is, as a borrower, I would not be sweating at night thinking what happens in the case that there is a margin call or one of these tokens do drop rapidly in price. So this is interesting on two fronts. This is interesting for one, borrowers who hold these long tail assets and maybe don't want to sell because these assets could go up in price significantly over the course of some period of time. Or this is interesting for those that are holding long tail assets and want to earn yield on them because others can borrow these long tail assets and put them to work. And that's what we'll go over today with the delta neutral strategies, where those who are traders can use USDC as collateral and actually borrow long tail assets and put them to work. This is interesting because those who are trading and doing these strategies, they don't have to worry about a liquidation in the case that they are borrowing a long tail asset like Link or Uni or even down the line, and we'll go over some of these tokens that you can borrow. They don't have to worry if that token drops massively in value, that their trade and the strategy they're in will be erased because of this no liquidation mechanism where the loans are rolled over like a bank loan. Hopefully that helps explain both long tail assets and how Teller works for them.
Yeah, absolutely. And like as we get into like the delta neutral side of stuff again, taking a step back as you kind of go through it to give people an idea. I think a lot of people think about market makers when they hear delta neutral, and a lot of the market is carved up and arbitraged out by this. But what I was really excited to see with what you guys are doing is that you've kind of seen where there is inefficiency in the market, and not just inefficiency, but opportunity for both sides of the market, like retail holders who have these assets, and then traders who want to participate in what is like honestly a new area of this kind of arbitrage market that you guys are teeing up, and you're making that available for honestly anyone that's on this spaces right now, or in our community, in your community, wherever, to participate. Where, to be frank, as they're about to see, it's like a very, very low barrier to entry, and the yields are healthy. I'll put it that way, and I'll let you kind of dive in. And I'm not gonna steal your thunder.
The yields are good. The yields are good with these trades, and I think that's why.
Yeah, I'm underselling it, so as you can over deliver.
Oh no, I love it. Let me share screen, and we'll go into these yields.
Like, honestly, when Ryan showed me this a couple of weeks ago, my mind was blown. Yeah, and like your gears just kind of start turning in terms of the way that you can think like portfolio diversification to these kind of strategies. Like, how can you leverage volatility and the way that the markets kind of go cyclical with short and long opportunities. So I'll shut up and let Ryan get into it.
Exactly. There are so many different strategies that can be applied. And the interesting thing with Gopher is that you can eventually run agents on this, where the agents can time up when these opportunities happen and enter and exit these positions. So I'll start with the earn side of Teller. This is where those with a long tail asset, and that's what we were talking about, assets outside of the majors. Now, of course, if you hold Bitcoin, ETH, USDC, or other stables, users holding those assets can deposit and start earning yield. But you can also earn yield on many different types of assets. So this is mainnet, where users are earning yield on all of these coins that you're seeing here today. If a user wants to earn yield, it's a pretty simple standard DeFi experience where if they have, for example, Ondo in their wallet, they could supply, let's say, 100 Ondo, and there's a certain rate that they would be earning. Now, that rate that they're earning comes both from the borrow rate, that is, if people are borrowing Ondo, and we'll go over that as a delta neutral strategy, and specific rewards that are being given out at the protocol level for supplying assets. And this is consistent across all the chains that are supported on Teller. There's six chains supported. You can see that here with the different assets. You can see Clanker offering around 11% yield, Arrow offering around 12% yield, and there's others. This is your typical DeFi deposit, start earning yield, and feel comfortable and happy with earning yield on tokens that may otherwise just be sitting in your wallet. The question is, why would someone borrow one of these long tail assets? And there's a couple reasons. There's different DeFi strategies where these assets can be put to work. And one of the main ones is with delta neutral opportunities. So let me refresh. Here we go. So this is the delta neutral opportunity page on Teller, where a user can find a opportunity where there is so much negative shorting, there's so much shorting on a per platform that the interest rates or the funding rates to short have become very negative, meaning that if you were to go long on a per platform, you would be paid that negative interest rate. You'd be paid that funding rate. So in most of the perp world, these arbitrage opportunities do get, these negative funding rates do get arbitraged out by market makers, where if there's a negative funding rate on one perp platform, that will eventually arbitrage to being a equal negative funding rate on another perp platform. This is because it's simply opening a short trade on one perp platform and opening a long trade on another. The interesting case about Teller is that there's a different pool of liquidity here for the short side. And that is where you can long the asset on a perp platform like Hyperliquid, Lighter, Binance, any centralized per platform or decentralized per platform. And you can short that asset here on Teller. So here are different assets, and you can see the different perp or delta neutral opportunities, arbitrage opportunities here. I'll look at WLYFI. This is the World Liberty Fi coin, and you can see that there is about a 47% funding rate on Rhea right now for WLYFI. So if I click into Rhea, and I'll share this tab, we can see the funding rate here, and that it annualizes to negative 47%. If I were to go long WLFI right now, I would be then earning this funding rate of 48%. The question, though, is how do I hedge my position? How do I create a position that has no price risk embedded into it? And that's where you can short on Teller. So the short here, the interest rate, it's shown here, it's about 1% to borrow WLFI and short it. And here, if I were to enter, for example, 100 USDC, I could short this 138 WLYFI. So by shorting this, I'm paying the short rate, which is the rate to borrow the real asset, the WLYFI, the actual asset, and short it. And that's around 1%. Oh, I think I was not sharing the screen. Here's what I was going at over. If I were to put in 100 USDC as collateral, borrow this WLYFI and short it, I'd be paying that 1% here, that APR. And then on Rhea, I would be earning this 47% APR. So it can be a high yield. And that's especially true for assets that have been consistently have had a consistent negative tilt, where more traders have been shorting the asset over time. And we can see that on different platforms where you can see the difference in the perp funding rates. I'll show, since we're using WLYFI as the example, I'm going to share it. This is an example of looking at the different funding rates. And this is using WLYFI.
Yeah. It's a good example.
Right, the red is all the days that it's been negative on all the different platforms. It's been mostly negative. So that gives you a really nice opportunity as a trader to go long on one of these platforms where you have some approximation of the future will have a significant negative funding rate for WLYFI that you can arbitrage borrowing capital at a low interest rate from Teller. And if you look at the other opportunities such as Base, some of them they're completely borrowed, some of these pools, so the liquidity is lower. But you can see here for Avant, the Avant on Hyperliquid, Bybit, Extended, Lighter, and Binance, the funding rates are very negative. It's 270% on Hyperliquid, 240% on Bybit, and it's kind of around there for these first four. Binance is the only one with a little bit less. But if you were to simply, as a market maker today, arbitrage these funding rates between the platforms, there isn't much yield to be gained. Because, for example, between Hyperliquid and let's just say Lighter, there's 60% APR to be gained. But if you were to borrow from Teller, even though the pool right now is maxed out because it's all being borrowed, even though the interest rate is higher, it's around 40% for this borrow, you're still making around 230% interest or APY or yield on this trade. And you're simply watching then at that point. Let's open up Hyperliquid here. You're simply watching on a daily basis to make sure that the funding rate is staying negative so that your strategy is staying profitable. And actually right now,
I was thinking, Ryan, when we looked at this, I don't know, I think it must have been 2.5 or 3 weeks ago. I think these numbers are pretty comparable to back then, right?
Stayed.
Yeah, it has.
The market has stayed around here. So any trades that were open around 2.5 weeks ago they've been okay to be open still.
Yeah.
And then the big difference here is these prices, because people are shorting, there's a signal in the market that the price may go down. the future. If Teller was running on a traditional money market where long tail assets such as AV&T were open to a margin based liquidation, there's a risk that as you're earning yield, you may get liquidated. But because your loans in Teller are roll over every 30 days and there's no liquidation, that strategy of opening this, for example, if this trade or strategy was opened around 2.5 weeks ago, there's no risk that the collateral sitting here that's borrowing the AV&T would get liquidated because the loan stays open until rollover.
Yeah. And just really walking through this for people that maybe haven't seen this before or kind of breaking it down, what we're essentially doing here is you're taking an asset, Avant here in this case, you're selling it, so you're ending up with USDC back from selling the asset, and you're then using that to go long on the asset. So if the price is dropping, your long will go into negative P&L, but the short position you've taken out on Teller by borrowing the asset and then selling it is going to go into positive P&L. So between the two of them, the loss you're making on the long and the gain you're making on the short cancel each other out, hence delta neutral, because the delta from both entries neutrals out at zero. And then what you're left doing is you're left collecting the interest. And in more sophisticated strategies like this, you may have to rebalance things. Like you may have to rebalance some of the gain from your short into your long to protect your long. And that kind of comes with more sophisticated future strategies. But if done at a small scale from like experimenting and just kind of seeing where this can go, there's a huge opportunity. And especially in market regimes like we're seeing at the moment, which is, extremely long bearish cycle where the mode of the day is for everyone to be shorting these assets. And typically you're going to find that market makers or larger institutions who do have spot positions are net short on these assets to protect their downside risk in a bear market. You'll see these funding rates high like this, especially on lower liquidity, longer tail assets that Ryan's talking about. And that will persist for a very, very long time. Like, we don't know what this looks like in a bull market, but in the bull market, you'll start seeing the inverse where you'll be going long and then short on the exchange, and you'll just run the flip side of this. But it's safe to say that, as Ryan showed on the chart, the majority of the time, these longer tail assets spend their time in negative funding rates.
And we can see that if I go to Hyperliquid, you can see the negative funding rates here, and they're really significant. For example, let's see, what is the most? Oh, it looks like we're looking at the most negative funding rate, which is 350%. Right now.
Yeah.
So that's high. There's a lot of yield to be made with this trade.
Yeah. And I think for a lot of people on here, like I think right now you guys are the only platform that offers this. I don't think you can find this anywhere else. And like Ryan's saying, if you look at the opportunity between Hyperliquid, Bybit, and Binance, there really isn't any arbitrage here because a lot of the arbitrage, within these rates has been absorbed by the bigger market makers. So this does allow, retail community participants to participate here. Obviously, as Ryan's saying, that there's a lot of demand for this. Like Avant, right? The pool, it was tapped out when I saw it 3 weeks ago, and it's tapped out today. And I think that you're going to find that demand, especially after kind of people seeing it today, is going to continue to increase. But just a really big opportunity as they scale this for everybody to kind of step in and get exposure.
Cool.
Exactly.
Ryan, I got a question. That's following your social feeds, you often highlight delta neutral opportunities. I think the one was all but 5 hours ago. You highlight Aero, World Liberty, and Uni. So this is for my less sophisticated knowledge and hope potentially others listening. When you're highlighting those opportunities at the funding rates of, say, for example, Aero 29%, what you're signaling there is an opportunity to get in because it hasn't been fully funded and there's a strong opportunity, particularly with that asset. I just want to understand when you signal through your social, um, I've got the understanding of that opportunity right for those who are going to probably follow you guys following this.
Exactly, exactly.
Okay.
Those opportunities that are highlighted have enough liquidity where it's meaningful to take a position in the strategy.
Nice.
So maybe 5 hours ago, it was at 29%. On lighter, it's recently spiked. So we can see arrow
Wow.
now, the opportunity is like 120%. And there's some liquidity available. There's around 13,000 available to be borrowed at the moment. And if we go to lighter, I just want to confirm that rate. Yeah, that it recently spiked on lighter to around 148% APR. So the borrowing rate is super cheap on this. It's around 1%, and the yield is around 148% for this
Wow.
trade. That's exactly what these socials are signaling. They're signaling
Wow.
the arbitrage opportunity for users.
Yeah. And as everyone can see, like on the lighter screen, there is sufficient liquidity on these perps for these size positions to not have slippage, to easy trading out of them. And what you're seeing in these kind of opportunities with the liquidity that's available through Teller are all tradable opportunities. It's really cool. It's really cool.
And I guess the final thing, tying this back into Gopher,
Yeah.
of course, anyone who is actively using the agents today, getting trade recommendations, or placing trades through Gopher, this is an easy tool to go back and forth between, to have two tabs open, one looking at these opportunities, two using the agents and the AI either recommendations or the AI to place the trades.
Yeah.
And then something else that I think ties it together. Recently, there's a Teller version of using Hyperliquid on the app itself.
Oh, damn.
And so I think this is another just like tab that can be used alongside Gopher agents. Let me connect a wallet. I'll connect one that has some positions open.
That's very cool. Oh, I know what you're going to show people. I'm going to shut up. Again, I think I know what you're going to. Yeah. So you can see it all
So
in yeah. That's cool.
all in one spot. You can take both positions while you have the agents open and you're understanding the opportunities. The other thing that's cool here is for those who maybe maxed out with their Hyperliquid balance, if you do have long tail assets, this is a really cool place to put them to work as collateral. For example, this wallet has a bit of Toshi. Toshi is a meme coin on Base. I could borrow USDC against Toshi, roll this over every 30 days. Again, there's no margin calls here. And I could immediately deposit that into my Hyperliquid account here.
Oh,
and
wow.
then
Nice.
and that capital can be used. And then you can place trades. Like if I wanted to, this account has like let's see, $113 in it. Let's approve the account for use on Teller. Let's sign this. And let's place a trade on Hype. Let's do, I don't know, 2x leverage. How much leverage can I do? Here, 3x leverage on a trade on Hype. Placing the trade. My trade is placed, and I can see that in the positions right here.
That's super
and then
nice.
if I were to go on Hyperliquid, I would see the position. So let me just connect on Hyperliquid.
And I'm assuming that you guys, just so everyone knows, you guys are using agent wallets with Hyperliquid, where all of the credentials end up being saved in, like, I guess, local storage for the user.
Exactly.
And this is all fully decentralized because of the way that Hyperliquid and the other platforms manage their kind of key signing.
Exactly. So the entire platform, and as you can see, if we go back, we were looking at AVNT because the funding rate was so negative. You can see the position we just opened, the 3x on Hype.
Nice.
Boom. So all of this can be a tab alongside anyone who's using agents on Gopher, or hopefully one day it can actually just be native inside the agent, inside a Gopher agent who could be arbitraging this yield.
Yeah, and I'm thinking like this low-hanging fruit, like a lot of people use our top trades tab, which allows people to discover the best trading opportunities in the market right now. We've listed like I'm looking right now, and Bitcoin is currently the Bitcoin and Zcash are the only ones in like the top 10 that are flashing like long signals. But it's pretty trivial, I think, to have like a an art like a delta neutral tab here, which shows all of the best delta neutral strategies and kind of how those rates have evolved over time. So we can kind of expose that to users, and then when people want to place a trade, they can just kind of come directly through to Teller. And then as we get into stuff like I'm gonna go through the next evolution of the agent platform today, which is taking I would say, a really big step forward, but one that's probably not going to be surprising to people that are keeping up with like what's going on in the AI development world, as in like the AI coding world, and applying that to trading. I can see a world in which these strategies are optimized by a fully autonomous agent that honestly, when you actually boil this down, becomes relatively simple in the way it can execute now, just because of how powerful the models are. So I think this is all coming pretty soon, where you'll be able to add in an additional dimension to your strategy where, for example, you could track to see when liquidity becomes available in Avant and then have a borrow executed automatically. So you're not constantly having to check it. That's the sort of thing that I see as like really like low hanging fruit here. And then also going in and out of trading arb opportunities as funding rates inevitably change. So as you're maybe constantly optimizing to be exposed to the top 3 delta neutral arb strategies on this table, for example, like maybe it's as simple as that. Like the agent wants to spend $1,000 of capital in the most efficient way dynamically across these top 3 markets, and it will then allocate it in the way that you as a human being would, which is super cool.
Exactly. Yeah. Oh my God, that would be awesome. That would take all the manual work out of these strategies, and I think there's a lot of yield to go around.
Yeah. Are you guys doing any of that sort of agent work on your side, or research and development, out of curiosity, Ryan?
I think we're more focused on being the liquidity protocol. But of course, this seems like such a natural progression that I think the Gopher agents would be a perfect fit for.
Yeah. And you guys have an API. So Ryan shared me like API documentation for this. I think that I was catching up with Zach this morning. We're thinking about the, quicker ways of getting product into your hands as users, because we now live in this crazy world where it's actually quite, I don't want to say this lightly, but it's like you can move really quickly building stuff. And the biggest issue is like distribution to users. Like, will users pick up what you're building, number one, or number two, how do you get it into users' hands the most in the highest velocity possible? Like, you can see that Teller's got a very, very well developed UI, a really good user experience. Like we're getting there with Gopher, but I think with agents specifically, there's often a lot of iteration you need to do, and building a UI on top of the agent can sometimes slow you down getting the product into people's hands. So we're thinking about ways in which we can maybe ship like something like a desktop application, which becomes, or a desktop like thing that you spin up, that honestly becomes a little bit quicker. Like mobile app is actually ideal, but the problem with mobile apps is it's quite costly to build the UI and then also the blockchain integration to do it in a fully decentralized way. And especially when you're doing trade execution, it becomes even more challenging with private keys and things like that. Where do you save them, so on and so forth? And then how do you execute the logic with something that's not you signing a transaction? You're delegating that to something else. And I see this as one of those things where, like, I think we could get something out to people very, very quickly, where you have something locally that runs. You have your private key that stays on your computer. It doesn't leave. There's no risk of putting it in the cloud. Like what Ryan was showing you with Hyperliquid is very different. The way that Hyperliquid and all these other platforms work, you give trade execution permission via it's called an agent key, which is kind of confusing when we're talking about agents in a different context. And you sign, and the key for that agent wallet is saved locally on your computer. Teller never sees it. Like, if and when we have trade execution in our app, like, we'll never see that key. That is one of the big barriers to us, like, really thinking about launching fully autonomous agents that trade on behalf of you, is that you'll typically need to give the agent permission or consent to execute trades. What is the safest, like, how would I put this, lowest risk way of doing that, either in the cloud or somewhere else? and there's lots of kind of constraints around that. So I'm hoping we can move more quickly, and I'm going to give you some insight in a minute in terms of how we're thinking of shipping this to you guys. Just seeing if there's any questions. Reposted, yeah. How many people we got in here? Maybe like 400, I think, at the moment. I've lost track. Yeah, I think about 400 people have joined so far, which is kind of cool. Ryan, do you want to tack anything on before I kind of dive into kind of Gopher focus stuff? Just for everyone on here, like dive in and try their product and take some of these assets and start trading with them.
Yeah, just want
Test
to
it
call
out.
out.
Check out the
Yeah,
yields.
I want to call out Doc. If you could re-up the link. We reposted the link to Teller a couple of times. Everything that Ryan has gone through and demoed, hit that and explore the platform. As you can see, it's very intuitive. Beautiful UI that will kind of hold your hand through the process of exploring and discovering their products. Really cool. Ryan, I had one additional question, and this may have been covered in your previous demo, but just interested in, there's one part on this site where you have something called a vault, a flagship delta neutral vault. Does that differ from the other products you took us through?
Yes.
I'm interested to know what that is.
Yes, so vaults are really interesting. I do believe one of the largest incoming products to DeFi is going to be credit vaults, and vaults where we can bring real world assets or real world opportunities on chain. All of the views of Teller, the different tools that I demoed, are over collateralized DeFi lending pools. Vaults are unique because they're tokenized real world assets. They're either tokenized positions or trades, and that's what you can see with the Delta Neutral Vault, which is very similar to what Athena is. Athena is a stable coin, which is a tokenized trade, a tokenized Delta Neutral position of ETH. And that's what these vaults represent, either specific tokenized positions of a stablecoin or real world assets. And for the vaults, I can actually share screen going over them.
Sure, please
Let me go back to the app.
While you're doing this, guys, just give me 1 second. I'm going to step away for a moment just to go and get the door here, and I'll be back. But don't stop. Carry on, and I'll be back in about 2 minutes.
Yes, sir. Let's look at this. All right. So these are some of the initial vaults, and the vaults are in a beta product right now. You can see a flagship Delta Neutral Vault, which is a tokenized Delta Neutral strategy. Again, very similar to what Athena does today with minting USD or UC. So as a user, it's a simple supply and stake process. That's very similar to the rest of the app. But again, these are in beta because these are tokenized opportunities. These are not necessarily over collateralized lending pools. Where does the proof of reserves or proof of assets come into play? That is here in the info. Here on the associated wallet, if I'm to open this wallet, I can see all of the positions that this wallet has taken for the Delta Neutral opportunity. So I'm going to share that wallet on DBank. I can see that this wallet has positions on Lighter and Hyperliquid and Teller. If I scroll down, this wallet has taken several different loans or short positions on Teller. Here you can see those short positions. There's a few on Toshi. This is on Base. There's one on Avant, one on Brett and Zora. And then you can see this wallet itself is borrowing USDC using a tokenized version of the position, which is this Delta Neutral flagship token, and placing along on these different perp platforms. So by placing along, for example, on Avant, as we saw, the yield is around 300+%. So this position for the Delta Neutral strategy is making a meaningful amount of yield and tokenizing that yield and offering it back in the form of these vaults. That's the vault from a tokenized strategy position. And you can also see that these are really interesting, which are tokenized bonds. So these are public bonds that are available across any brokerage. And these tokenized positions are actually used to borrow stablecoins or USDC against the token and purchase or acquire the bonds for these corporations. One of the what we think is the next evolution of stablecoins is how do we diversify outside of simply USD Treasury. USD Treasuries, of course, are the safest of all potential real world asset yields. The rung of additional risk or additional beta or additional to get additional alpha on the beta are really corporate bonds in the traditional lending markets, and the markets are huge. There's I think there's over 50 trillion in just a general corporate debt in the world, and these corporations have massive amounts of debt where DeFi can really be put to work. So you can see here too, if I were to show the proof of the data on these corporate bonds, this is one for Apple that expires in about a month, and the yield is around 3.7%, which opens opportunity for DeFi pool for Apple bonds to begin earning yield. And it's just another differentiated way.
Oh, sorry, Ryan. What's the yield over? Is this the yield over the term of the bond, or is this annual?
This is the yield over the term of the bond to maturity.
Okay.
So if you were to buy it today and hold it, you would earn 3.7%. Now, granted, that's for like a month for this specific bond.
Nice.
If there's, I believe some of the others were longer. Let me see this National Bank of Canada or Oracle. So if we were to look at the Oracle one, I believe it's a bit longer. Yeah, this one's till the summer, and the Oracle yields are actually around 4.28%. So of course, this is very different than a traditional DeFi lending pool. It's not margin based, it's not collateralized, but it is a very public, audited system where these public companies have been actively borrowing for the entirety of lending markets and public stocks. And that yield is then immediately, of course, passed over to DeFi in these vaults. And that's what these vaults are. Tokenized opportunities currently in beta, but being rolled out to stablecoin holders who can earn differentiated yields.
Amazing. Thank you for that. Bridging worlds there.
Yeah. I think what I love so much is that everyone's fucking talking about doing this kind of shit, and you guys are just shipping. Like, I think when we kind of went through stuff before the holiday, the corporate bonds weren't up. I don't think. Maybe they were and I just missed them. No, but they've gone up over the holiday, and like it's just this whole kind of wave of everything moving really quickly. We've got really good tailwinds, like risk is lower. Yeah, I mean, annualized, like they're pretty good returns on those corporate bonds, to be perfectly frank. Like,
yes.
Yeah.
And you're
crazy.
looking at the next kind of leg past the U.S. Treasuries.
You are, aren't you?
The rates are giving a little bit of alpha above them, but it's right there in that will funds come summer in order to repay these loans that they won't go into bankruptcy, which of course all that information is public. Because they're
and like, is Apple or Oracle going to go bankrupt? I mean, it's. I never want to say never, but also Apple and Oracle. Like, history shows that's. It's not the US government, but if there was anything to happen, the US government would probably come in and, I don't know, save them. I'm thinking too European.
Maybe they're a little bit too big to fail. I don't know if they fall into that category, but probably.
Who knows? I think they are, probably. But who knows where they are right now?
Yeah, exactly. No, it looks like such an obvious opportunity for DeFi to kick in. And of course, for agents over time, of course, the Gopher agents are for trading. But over time, as Gopher looks for yield. Other opportunities.
Yeah. And maybe we can dive into that, because it's kind of like all of this is making me think about where we're going next and how this sort of fits together. So if there's any questions, Zach, let me know. If not, I'll kind of dive into showing everyone what I've now codenamed Bart, after the Bart Simpson pattern meme, and we'll dive into it.
Can I just say you didn't consult the marketer here on naming that, but I'll go with it.
I literally pulled it out of my ass this morning. Don't worry.
But yeah, Brendan, before you go into what we've been up to, I just want to thank Ryan. Thank you for introducing all the amazing tools to our audience. I hope they take away and start exploring and looking at those. Really great to have you on. As you develop and new tools come out, we'd love to have you back on. We'll be resharing this on our X account alongside a link for you to explore the various tools that Ryan went into. Thank you very much for joining us. As Brendan goes into what we're building, you're welcome to stay and ask questions or drop off. I know you're incredibly busy, however you want to roll. I had one last question. It's a very technical question. What's the lore behind that wonderful green monster that features on your website and your socials? What's his or her name? How did he come into being? Very quickly.
Teller bear. It's the Teller bear.
The Teller bear. I
Teller
love
bear
it.
because Teller's been building actively through the bear market.
Well, I think the bear and the gopher will be great friends. They already are. They're the same color, which is, great synergy there.
Green's
The color of money.
The color of money.
Yeah. And I think they're friends in the wild.
They are.
They are friends in the wild. Yeah, they are. Absolutely.
Thank you, Ryan. Brendan, I'll hand it over to you. Just before we go, is X the best place to keep track of your product launches, tools, and those kind of delta neutral opportunities that that you showed us?
Exactly.
Community manager, if you could throw up in the chat Teller's X handle, that would be great.
Exactly. Stay tuned. Stay tuned on Twitter, and we do have a Perps Telegram group. If you go into the app, you'll be able to find it.
Nice,
sick.
I'll let you go.
All right. Yeah, cheers, Ryan. Catch up soon.
Take care. Thank you.
Cool. All right, everyone.
That was cool. I mean, I love it. I never knew how extensive their tools were and how much. The last time I checked in with Teller was 6 months ago, and they've just completely expanded what they've built and the opportunities they offer. It's really, really cool.
Yeah, I love it. And I'm gonna move relatively quickly today, and you're gonna see me whiteboarding. I think I've whiteboarded once before, but given we're kind of getting through, and I'm glad we spent so much time on Teller because, I think when you're thinking of portfolio construction, and we've had almost 500 people on this week, which is great because post holiday coming into January, there's a little bit of market fatigue, and I'm stoked to see everyone here sticking around through whatever it is we're kind of going through, whatever market regime it is we're going through, and pick up with where over the holiday I got really inspired as I was kind of taking a step back, and much to my wife's annoyance, I didn't stop coding at all, but I'm excited about what I did work on and what we're going to show you guys. So really quickly, this is again, a very high level reminder, 2025, wow, 2026 right now. So crazy. Start with our trade analyst that you'll use just to kind of give you another proof point here. I want to show you an analysis I did of Tau. This analysis was done 4 days ago. Is this right? Yeah, 4 days ago here. I was looking at an intraday long. The price of Tau was down here at $246. It was a very clear long with take profits at 278 and 300, and boom, up we rode to here and we hit it. I haven't looked at analysis here in this pullback, but it's good to see us kind of riding back up here. But again, if you are not using the trade assistant, you should be using it. It every single time strikes bullseye, really good results. And this is once again proof that had you looked at this trade and entered in this pullback here, so it's this first pullback that it was signaling the entry, you could have then ridden this really big wave up to these two targets and had a really nice kind of swing long. So just reinforcing and reiterating, use the product, get dug in, the trade assistant is your friend, and don't ever overlook that it exists because it is just giving you killer alpha every day if you're not here. We then did discovery, which allows you to quickly find what to trade in the top high volume coins. We then did also Gopher, which led to Arena Royale, which a lot of you here participate in. We had 4,200 agents deployed on Alpha Royale, billions of tokens of inference over the course of three sessions. we noticed that 90% of the agents were misconfigured and didn't work. We had a 1 week iteration cycle, and critically, there was no back testing. It was a live market, so kind of slow. Like, you built an agent or a model, you deployed it, and you just had to wait for the market to evolve to see how well it did. So that made it very slow to build your model. Really, really slow. I don't really like slow. I'm not the kind of guy that likes to go slow. I'm the kind of guy that likes to move really, really fucking fast. And slow is not acceptable. So I kind of took a step back over the holiday. A lot of you have been, I'm going to say, yelling with good reason about back testing. And as a trader, you'll know that back testing, while it isn't bulletproof or foolproof, is a really critical part of building your strategy. And for some reason on Christmas Eve, I found myself in a rabbit hole on Kalshi, building a machine learning model in my free time on Christmas Eve, which is dumb, to predict the weather on Kalshi's weather markets. And to build a machine learning model, I started using AI to do the process that I was doing for me while I was with guests on Christmas Eve. And I came back and it had done a pretty good job of building a model for predicting the weather the next day on a Kalshi market. I'm not a betting platform guy. I did it because it seemed like a fun thing to do, and I didn't take it any further. But what I learned doing that was I could evolve a strategy for trading on Kalshi by using this loop evolutionary process of an agent. And what it did, it essentially took what would have taken me 3 or 4 or 5 days to do, and it compressed all of the iteration and experimentation that I would have done into a couple of hours while I was hanging out with people, talking to guests, and I could then step away from my computer and come back and see the results of the work the LLM or the agent had done that would have otherwise taken me 5 days and 10 hours a day to have done, even using AI tools to do that. And this got me thinking, because in order to do this, I had to build a backtesting data set of past historical temperatures and all this other kind of shit. And before this, I'd also been building we have now at Gopher a huge data set of past trading data from Hyperliquid that we've been starting to build a backtesting engine on. So for any of the assets on Hyperliquid, we have data going back quite a long time now that's indexed, and that can be used for building and testing models. It's typically how we build and test our best models. And I took this kind of experiment and I was like, fuck, there's something really, really interesting here. So what's next? What is next is a product that I called BART this morning. Why did I call it BART? For those of you that have been crypto in a long time, you'll know the Bart Simpson pattern. Bart Simpson was alive and kicking in the markets between the 16th of December and the 4th of January, chopping people up, creating chaos, and putting this up and down pattern that liquidates everybody that doesn't know how to manage their trading strategies. Bart has been around for a long time, lurking on the charts, and you've got to love Bart and you've got to hate Bart. And what does BART conveniently stand for? It stands for Backtesting Adaptive Regime Trader. And what does this mean? It means that we're able to backtest across a range or a data set. It means it's adaptive, that it adapts to different market conditions, which are regimes, and it's a trader. Like it trades. Like, this just happens to fit together. Maybe I've overfitted. We may not call it BART, but this is the code name for what we've built. And it's codenamed this a little bit. I got the inspiration from this particular character, which is Ralph. Ralph went viral on Monday of this week. What is Ralph? Ralph is a product that is really similar to BART, and it's a loop that an LLM goes through to target a specific outcome, and it will continue looping until that outcome target is met. And it will do this as long as you got money to pay for the LLM, or as long as you got time to keep it looping. Whichever one runs out first, it will keep doing it until it gets to the perfect product. So every iteration, it takes like context from the previous iteration. It compresses it and it makes it nice. Now, this is what I already do with trading. It's what a lot of you already do. If you think about the way that human beings operate, we learn through iteration. We go and do something, we collect data on that, we memorize it, we write it down, we use it to create a new strategy. Every time I get wrecked, I analyze why I got wrecked. Every time I get a moon position, I look at that. I use the analysis of that to then inform my next trade. We always do this every single time with everything we do in life. I make a decision that's good, I make a decision that's bad, I take a look at it, I adapt, and then I evolve what my next decision is. Now, how can we take this process and accelerate this 1,000x, 10,000x, 1,000,000x? Well, we do it using BART. And what BART is an autonomous AI agent that evolves trading strategies until they're statistically bulletproof. So what it does, it loops through backtests across massive data sets. It mutates and changes the prompts or the strategy that it's executing on. It grabs different indicators or different signals. This is what you'll do as traders, by the way. It then validates the best prompts that it finds, and it validates it by saying, okay, I'm targeting a win rate above 50% with a confidence of outcome of X or Y, with a Kelly criterion of above B or D. And it takes all of your criteria from trading, and it will continue doing this evolutionary loop, which is one agent that orchestrates hundreds of agents that are all working in parallel to find a winning strategy for a specific asset in a specific regime. And what it then does, it runs a Monte Carlo simulation. And just to simplify what Monte Carlo simulation is, it will run the same strategy over the same data over the same period of time, and it will validate if the outcome is consistent within a standard deviation or within a statistical limit. Because I could run a strategy one day and it'll work, and then the next day I run it on the same data, it could be different. The model or the agent then runs and validates the best prompts to ensure that statistically they remain consistent. There is one really, really, really big problem with LLMs. LLMs are not typically deterministic. They're this thing called probabilistic. And what they do is they kind of guess what the right next word is. And this is why you get hallucinations. You get hallucinations because not all the guesses are always right. What I've discovered doing this is that by doing this process, you can create a prompt that drives a deterministic outcome, which means if I run this prompt 100 times, I get within a statistical variance a model that performs consistently through a regime. And what I mean by a regime is specifically for Bitcoin over the holiday period, it was in a sideways regime or a ranging regime. It was ranging between 87 to 90K, let's just say, chopping everyone up being BART. Now, when the regime changes, your model changes. If it starts to going back into a upward trending market, you've got to change your model because the regime has changed. So BART will also detect if the regime has changed. It will detect if the market has moved from a sideways market to a trending market. And it will then do this same strategy where it will reanalyze the prompt, it will recursively go through a new set of prompts, and it will adapt itself for a prompt that now works the best in this new regime that's changed. I use this as an example for people recently. Before Maduro was taken by the US, oil was trading in a specific regime. The second Maduro was taken, the regime of the market changed, and you had to change the way you traded. This agent does that for you. It does it in real time, and it then backtests it, and it creates a statistically significant outcome that means that you can trust and go into market. So pausing for a minute, like, why have we done this? We've done this because this is an unacceptable period of time to wait to prove your model. We want to get us and you as a community to the point where you can build a model, or we can build the best models or the best strategies and sell them to you guys or the community who wants to buy them. And you can then use these models with confidence to go to non-paper trading as quickly as possible. The first winning strategy that Bart found was a Zcash strategy. In a sideways regime, even though Zcash through the holiday was relatively volatile, this was over the 22nd to the 31st, and it was a 90% win rate with a bunch of other statistics. I shared it in the Go Trader Telegram as it discovered it. And just so as you guys know, I've written actually a formal scientific paper on this, which we're looking to publish next week. It provides an actual mathematical framework for how this works and formally proves that LLMs are capable of trading markets like this in a deterministic way. And we'll continue doing more research on this and publishing more findings. You can see, like, we've got trending, ranging, volatile, or breakout markets, which is the regimes that the agent is able to track. And it kind of goes through how detection works, how we think about like decision variance with an LLM, and so on and so forth, and kind of substantiates what we're saying with evidence. So we start to be like really significant thought leaders. I haven't seen anyone do this yet in anything in this space. So this is really novel work. I'm going to share it with everyone. You can all take a look at it, read it. We'd love some feedback. But look, this is it in action. This is a Bitcoin BART run. We start off here with executing 19 trades. Maximum drawdown is 11%. Its win rate is 30%. Its return is -5. And what it does, it gradually iterates on things like the number of trades it's placing. Like it slowly realizes that it's losing too much here and that it's over trading. So as soon as it realizes, fuck, I'm over trading, you see this big jump where it jumps down to one trade. It really tightens the criteria up, which gives it a 100% win rate, but only one trade with a very, very small likelihood of drawdown. It then slowly increases. It actually took quite a big jump. It kind of changes its parameters to then at run 35 settle on this trade here, which is offering a 3% return over a 10-day period. Now, as many of you that are traders know, Bitcoin during the 17th of December until the 31st of December was just basically sideways, not doing anything. There's barely any volatility. So this proves that in a poor performing, low volatility market, it can find in one of the most challenging trading environments a strategy that starts to conform to its criteria, this was the most recent one in this test run that it found. And it took about 4 hours for it to find this. Now, for me to have done this myself, this would have taken months. It would have taken months of me like cooking up trades, like cooking up agents, running them,
potentially
blah blah blah.
Potentially 10 years of experience. I don't want to be hyperbolic, but that is really the truth. Like,
yep.
You're seeing pro traders 10 years of knowledge rolling out within a 4-hour period, pretty much.
Yeah. So this is what we are going to be shipping to you all. It's very unlikely that we'll do another Alpha Royale Agent Arena kind of style thing, because it just doesn't return the results that this does in the time. We learned so much working with you all. Like, what we learned from everybody testing it is that this is what we have to build. And the job that we and I've got over the next week is to get this into a position where you can all run it as quickly as possible, so as you can start seeing these strategies evolve in a really meaningful way. And just so as you all know, this is still running on a very low power model. I think the way that we may release this is so as you can run it on your desktop. I'd love for you all to say in the chat if you're a PC user, a Linux user, or a Mac user. You can see that I'm a Mac user, but I want to know kind of what platforms you use. And it might be the fastest way we can kind of work to get you guys as really enthusiastic traders putting your own key into this desktop app. Maybe that's a private key for Hyperliquid or whatever, where you can start trading it locally before we put it in the cloud. There's a lot of security considerations we have to go through before we put stuff in the cloud. I want you all to be able to actually, work with the agent to find a strategy that fits for you. And then from that strategy, start trading it, whether it be $100 or $10 or whatever it is. Start doing some meaningful trading. We're going to do the same thing internally. So taking this finding now, productizing it, shipping to you is our priority. That's why I've been kind of not quiet, but we're focused on shipping this. And we will also put up our own findings and models that we have found, so as you can start seeing a little bit more evidence of what these strategies look like, so as you can start applying them. And that is it. With that, that's what we've been working on, and I cannot wait to get this out to your guys' hands. Just in the trader channel, just say Mac or PC, and that just helps me think about the way in which we package this to get it out into your hands in the best way possible.
Community manager Doc, could you throw in our Go Trader Telegram channel for those who want to join and get their preference across to us?
Yeah, so yeah, Bart is your friend that thrives in the chaos that wrecks everyone.
I love to see the resurgence of a trading meme used in a
I want this to
way.
go viral in the same way that Ralph Wiggins went viral for coding, because this basically does the same thing.
Yeah, that's what I wanted to understand.
Yeah.
So Ralph Wiggins iterates and learns on the back end to produce the best prompts for coding an application, for example.
Yeah, for building the best code. Because if anyone on here knows about coding with AI, it requires a fair amount of iteration. And what I mean by that is the AI hallucinates, and if you want creativity, you have to give it a high temperature, which increases the likelihood of oh wow, I'm just looking at the time. I'm running potentially late for someone. Oh, so okay, I'll ping them in a second. Just getting carried away here. What am I trying to say here? It will hallucinate, and that means that you'll be hallucinating with producing code, and that means you have to the best way to write AI-driven code is to continually have the AI forensically analyze the code that's been produced, that it has produced. So when I'm writing code with AI, I have a file that I reference that has instructions to tell the agent to review my code 10 times once it's written, find any bugs, document those bugs, fix those bugs, and then review it 10 more times, and then fix any bugs again, and then review the criteria that I've written to start with, which is what we're trying to build, validate that what has been built meets those criteria. If it doesn't meet those criteria, another iteration. Once it's done that next iteration, check the bugs again, check the acceptance criteria, and you just continue that loop over and over again. Now, you either sit there and you prompt it, or you have another agent that's directing it, or you have a set of logic that's directing it. And we're doing the same thing, because the reality is what we all do in life. We all unknowingly or knowingly apply this process to the way that we learn, the way that we build things, the way that we figure anything out as human beings. And all we're doing here is aligning the way that the LLM develops and evolves with the way that we do things, and allowing ourselves to do something at a scale that would have taken us a year or 10 years in the past. Like in 1 day or 2 days, I can write as much code as was taking me a week 6 months ago. That 1 week 2 years ago was a month of work. And before AI, that was 6 months of work. Like, we have to start embracing these tools to do so many things and applying it here in a way where you get high statistical confidence to your trading output is going to be massively high value and is where the future is. This is the future. And I'll finish on that and can't wait to ship it to you all next week.
I like ending on "this is the future." Thank you, everyone, for joining us. We'll have information on our next session, hopefully having another exciting guest. Thanks, Brendan, for taking us through
No worries.
I will be using some of that information in that whiteboard to tease and kind of recontextualize and educate our community and all the Gophers on exactly what you're building and what's coming. Can't wait to do that.
Awesome. All right, everyone, have a wonderful day. Great to see you all, and can't wait to catch up soon. We'll see you all next week.
Bye-bye.
Bye.